Good morning. Good morning, everyone.
Good morning.
Good morning. All right, I'm pulling something up on my side screen over here. Those of you who don't have two monitors is a massive level up to be able to look at docs and then enter the info, but I'm sure I'm preaching to the choir. I want to show you something we talked about, but I can't show the client name, so I just need to adjust something real quick before I share my screen. A little while ago, I did a post because I had a realtor call me, and it was a family member of someone who had a reverse mortgage. The person had passed, and so they were trying to figure out what they're going to do about the property. And the realtor uh, wanted to understand and was like totally turned around by what he was seeing in the records, the title, and what's recorded. And so I want to make sure all of us understand, because when you can answer questions like this, it puts you above the rest. It, it's not like you're on a hunt with the realtor. You're saying, no, I completely understand what's going on and what you're seeing and why you're seeing it, and here's why. And let's make sure that you fully understand, because these numbers are not relevant. They don't mean anything, which is kind of crazy to say to a professional. Um, so let's go here. What happens at recording? So anybody who's new, this may be news to you, but if you haven't done your first reverse, you will find out soon. There are two notes signed at recording. The two notes signed at recording, one goes straight to FHA. FHA has their own full file, so that if the lender were to ever to go out of business, FHA already has the file. And or if the loan were to meet the credentials for it to be transferred to FHA, they already have their own file. So it needs a note. So what does that mean for recording? Because most mortgage professionals are used to looking, and realtors and title and other professionals are looking at a title report. Actually, it's not even a full title report. I just have a prelim. And they're used to saying, okay, well, here's the date the loan was done, and here's the amount that was recorded. And for most every other mortgage that I know of, that amount matches the amount that the initial loan was. Now, if you know that their interest rate was 4.5% and you can see the date, you can calculate, hey, this mortgage was done 5 years ago, you can actually do the math to figure out what the loan balance is today, assuming they've never made an overpayment. That's not possible in reverse. And it really turns people around. And they get really upset, and they're like, oh, they messed up the recording. And you have to stand really strong and firm in your knowing it's not a mistake. This is how it works. And you have to almost command that, especially if you're dealing with a realtor who's been around for a very long time and never seen anything like this. And that's what the most common call and question I get on this is a realtor. And part of that is, yes, I understand you know what you're doing for the like every other transaction. Reverse is weird and different. No worries. Let me just explain how it works. So I pulled out a title report. If you guys don't use ARS Allegiant Reverse Services for title and escrow, I highly recommend them because they just know what they're doing. But also within their website, there's a tool, REI Source, where you can look up profiles really easily on your own. You don't need to wait for anybody else. And I don't know, I like to have full control, just be able to bust out everything I need right away. Can you guys see my screen okay? Give me a thumbs up. Okay, cool. Thanks. All right. So what we're seeing here, two recorded mortgages on the same day. Here's the first one. And this was actually higher in the report, but I copied it second. So the first one we're seeing here, 3/27/2020. And the mortgage amount is $1. What? That doesn't make a lot of sense. It's an adjustable rate loan. It says it's conventional. The mortgage term is 73 years. What's going on there? The mortgage rate was 2.32. What's going on there? And then we've got HUD right there. Okay, that's interesting. And then we have a second one here. Mortgage amount is 1.14. Well, at the time, this is a reverse mortgage I actually did. I'm redoing it for her now. At the time, the house was only worth like 750, 800. So can you imagine if 2020, if this were heirs looking at this, going, wait, the house isn't even worth that at that point in time. How could she have borrowed 150% of what the house was worth? So they record either the appraised value or the max claim times 1.5%, whichever is lower, right? If you're going to hit that max claim at 1.149 right now, then they would do 1.5 of that. So you can literally just grab your calculator and backtrack. And this is how I do my HECM to HECMs. There's a lot of ways to do HECM to HECMs. Again, I like full control. I like to do the math and not need to send something and then wait for somebody to send it back to me. So this is how I do my HECM to HECMs. So we've got a value of 1,148,400. I take that 1.5 divide. So I can tell you at recording, the max claim, and she was a little over it, I think the max claim at that point in time in 2020, I believe, was 765,600. Or this was her appraised value, if my max claim isn't totally right in my memory for that year. So
what did you divide by?
1.5.
Oh, okay.
Or if you're going to figure out the recording amount, we could do the opposite. So now the max claim is 765,600. So 1.5 times, and that gets me back to the number we're seeing on the screen, 1.148,400. So you can go backwards and forwards to figure it out. So that's one of the inputs when you're doing a HECM to HECM. What was the max claim? Now I have a lot of the variables I need. I've got the max claim. I've got the date it was recorded. I have a chart, and I happen to just know 2020, the MI wasn't different. So I know the MI was 2% at that point in time. If this was a lot older loan, I might look at my chart and say, okay, 2014, what was the MI? And there's some years where you can't figure that out. We had a saver program. We had a program where if they drew a certain amount, it was one thing. If they drew under a certain amount, it was a different thing. So there's a few years in there, but for the most part, the MI has been what it has been for quite a while now. And a lot of us are so many HECMs were refinanced already during those years. All right, so that's what you're seeing here. So you're going to always see two, one for $1, one for 1.5 times the max claim. Let me admit this person. Okay. And you're also going to see, look at that, reverse mortgage funding, RMF. This loan was placed with RMF. They are no longer a business. They're no longer a company. So this is one of the really good examples of FHA actually did take over the file, or a different servicing portfolio bought it. It's possible for either way. But this is a situation where it's very likely FHA could have taken over. And somebody on here might know the details of what happened to RMS portfolio. I didn't track that much. But just know this is really important. When I get pushback, when I get calls, why is this going on? Even if we divide it by 1.5, that's still not the mortgage amount. True. The way I explain it is the reverse mortgage is a loan that grows over time. I try not to say the words neg-am because it just is a very technical term for most people. But for those who understand, it is a neg-am loan, negatively amortizing loan. And so what that means is they don't know how much this mortgage is going to be when they have to pay it back. So they want the recorded amount to reflect enough room. And so that's where they came up with this number. Is there probably a better explanation or more precise way of saying that? Probably. Maybe we'll mastermind on that, how you guys explain it. But that's the way I do it. They don't know what this loan amount is going to be, how long they're going to hold it. 73 years term, that's 50 years past the youngest borrower's 100th birthday. For this specific person, it was 73 years. Somebody else, it's going to be a different number. And so these variables change, and you want to be able to have command in knowing that you understand it so you can explain it to other people when it comes to you and use it for your own advantage. Like I said, I use this information to do HECM to HECMs without having to send off forms and going, oh, please help me, give me the information I need. I just figure it out. All right. Do you guys have any questions on any of this? If you do, just come off. Oh, there's a chat question. Let's see. Great question, Robert. I let the software do it for me. Robert's question, how would you calculate the UFMIP refund on the HECM to HECM refinance? All the lenders have a worksheet where you can actually do the math and figure it out. I just let the software do it for me though. to be honest. As long as I have the variables correct in the initial information. So like the max claim has to be right. The initial MI has to be right. The date has to be right. As long as those variables are all correct within the software, either for First Vision or Quantum, I've never gone wrong relying on that. Now, others do use a worksheet, and I think processing has to complete the worksheet to get it through. You can even go in there, throw a test loan HECM to HECM within Quantum, and then go to, I believe it's the FA screen. I think it's the FA screen. And there's going to be a section where you can actually download that form and complete it, or ask for one of your lenders to send it to you, the HECM to HECM refinance form, because we do have to pass certain tests. Now, the software also tells you that if you're passing the tests or not. We don't have a lot of HECM to HECMs going on right now. This is pretty unique that I'm able to get this one done, in part because I had to do a very, very low rate for this person when we did her loan. There were a few reasons we needed to do like a rate that I probably couldn't do today. But anyways, that kept her mortgage balance from growing. Most of the HECM to HECM refinances I look at right now, they just don't work because our PLFs are too low at the current moment. They won't always be. And I think if we all pray really, really hard to the rate God, that maybe they'll give us a little inch down. All right. Any other questions on this before I stop sharing my screen here? Okay. All right. So that was my explanation of it. Does anybody have a different way that they want it, that they explain it to their clients? They want to share? All right. Well, that was the important coaching piece for today. So now we're just going to open it up. Oh, I saw divide 1.5% part, but I missed the other percentage amount part. I think it was just divide by 1.5. So you take the large recorded amount. In this case, it was 1.14400, 1,148,400. Sorry, I get messed up saying numbers out loud. Divide that by 1.5. That gives you the max claim at the time they did the loan, and or the appraised value, which is the max claim for most loans. But if you do it the opposite, so if you want to know like what's going to be recorded on the loan you're looking at today. Let's say you're about to do a reverse mortgage and the value is 800,000 and the appraised value is 800,000. So the max claim is 800,000. We would take that and go 1.5 times. And now we know the recorded amount is going to be 1.2 million. So you can go backwards or forwards. And some of you may prep your clients. If they're realtors, you probably want to prep your clients. They're probably going to look up their own property records. Anybody else? I don't really know if I'd include that information because when are they going to say it? Oh, no worries. All right. Well, if we don't have any questions on that, I'll just open it up to any questions or topics you guys have, and then we'll go to Mastermind. I'll go off camera pretty soon. So anything specifically for me today?
Christina, I have a new client that I'm not sure if anybody's run into this, but he's 86. His wife just died in December. She did all of the bills. He's in a really bad way. He's about 4 or 5 payments behind on his house because his daughter was helping his wife, who had signed over power of attorney for both of them to his daughter, who was not paying any of the bills and pocketing all the money. Took 2 of their vehicles and gave them to her kids, who then didn't pay the payments, and those got repossessed, and 37 grand on a credit card. It just keeps going on and on. So his credit's like a 530. And so we're gonna have to do a lease, trying to get his house paid off before they foreclose on it. And but all of the the way I understand it, looking at the guidelines, all of the stuff on his credit, the derogatories have all been charged off. So the first person that he went to on the reverse told him that they would have to pay off all of the bad debt, which if I look at the guidelines correctly, we don't. So that's one thing, but and then on top of that, I was looking at the guidelines, and if there's a police report related to fraud or any of that stuff, that would also negate that. Has anybody else run into that? Kind of the elder abuse type of stuff?
I wish I had more insight. Oh, go ahead.
I've run into it a few times. I mean, we've even been able to avoid at least in some cases, if we can document what happened. As far as what has to be paid off, I mean, we can't pay off directly anything other than liens, mandatory obligations. So generally speaking, that stuff is not an issue.
Perfect. Yeah, that's on a side note. I had gotten word about this guy through a bank that I work with that doesn't do reverse, and his friend had called in, and then he basically told her to give him my card, but then he gave his phone number, so had a miscommunication. So in the meantime, they had a paralegal they're working with that sent out a different reverse mortgage specialist who walked into the house, sat down for 10 minutes, said, "I can't help you," and turned around and walked out. So my little PSA on this is, if you're not in this for the right reasons, get out. We have enough people that are doing this crap that absolutely pisses me off. I mean, the guy at least deserved the dignity of having a conversation with him. So she knows I don't like her. We've had a couple run-ins. So I'm just, it's these people that are destroying our chance to have a better reputation in this industry. So I don't know how to weed them out. Maybe that's something that we all need to start thinking about as far as an industry ourselves. But there's got to be a way. It's, if you're just cherry picking all the easy ones with a bunch of rich clients that you can sit there pushing their poodle away from you, then, like I said, you're probably in the wrong business.
Yeah, great point. I think every reverse loan officer who's been in it for any amount of time has some harrowing stories like this. Otherwise, the benefit is it does push people out. If they're not in it for the right reasons, they're not going to continue, hopefully.
Yeah, this one, I think she's been in it for a while. But like I said, this isn't the first story I've heard like that, where it's just, if it's not easy, I'm out. And that was
they're weeding themselves out, because at the end of the year there was over 300,000 licensed NMLS loan officers in the U.S. Now there is just under 100,000. So
wow.
They're dropping like flies.
Wow.
I still think we need a reverse mortgage coach discount code for glitter bombs. I'm just saying.
When you said that, I've got some people I'd send that to.
Your door, you're going to stop doing that.
I'm going to talk to Scarpati next time I see him and see if we can get something started where you have to have some sort of a designation or certificate to be able to write one. I think that might make it a little, if you have to go through a couple hoops to get there, maybe they won't. So
yeah, Ernie, there's an originator in Michigan who she's a CRMP, I think it's Michigan, and she has gone to try to create, like, with government to a higher standard. And I think she has a group of people that are kind of on that mission. I can put you in touch with her and see if there's something we can do.
Yeah, it's something to think about for sure.
We used to have the mini eagle and they got rid of it. I mean, that as far as broker shops, you had to show net worth and you had to renew every year. You had to go through a CPA audit every year. That's what we had until they got rid of it. So that kept a lot of brokers that shouldn't be in the game out of the game. How much equity do they have in the house there? And is he in control of the property now, the title and all that other good stuff?
Yeah, I checked title yesterday. It's all clean. That was what the paralegal had done. They went and took him to the doctor, got him, a clear diagnosis, said that he's fine, and they took back the POA, forcibly, did some orders of protection and that sort of thing. So they're cleaning up that end of it, and it's hard for me because I want to clean the guy's house up for him and haul off all of his trash and all the rest of that. But there's at some point you have to draw the line as far as that goes. But we got him signed up for Meals on Wheels. He'd been eating peanut butter sandwiches for the last month and just different crap like that. So
yeah, I volunteer for Wheels on Meals. It's a great project.
Yeah.
How does he have a lot of equity? I mean, could he do like an IO hard money deal that will report to credit and then give him reserves to make the payments for that number of months? And then
I think we're good. I think we can get this done. He's got enough equity. The way I'm looking at it is if we don't have to pay the bad debt, then I can pay his forward mortgage and then set up about a $70,000 line of credit for him. So that's right now at face value, it looks like it's doable. It's just, I've gone over the guidelines and it looks like it's okay with that debt. So, but at very least, even if we had to pay off all the debt, he's still in a positive position, not having to pay that mortgage. So.
Hey, I would assume that, I mean, on the forward side as well, if you have like identity theft and all of that, you do have to get a police report, and then you have to submit the police report to all three bureaus and get them to update it. So once you get the police report, then the worst part about it is going to be on you getting, your credit company to update the bureaus and dealing with that. But it's definitely something. I've done it before.
That part I think I'm good on because, well, obviously my past life as of last Friday.
Right.
So, that part I'm good with. I just, and I'm going to set him up with a Lisa one way or the other. It's just make it easier on him, that sort of thing. So I think I'm hoping it'll pan out.
Has anybody had success turning a bankruptcy into a reverse?
I haven't messed with it, but the last person I talked to about that, I want to say it was a chapter 13 and they either paid it, they couldn't pay it off or they had to pay it off with the reverse. That I don't have a great answer for that, but I know that they actually did one.
You have to get permission from the court.
That was one of the things.
And there's a gentleman in Southern California, semi-famous, Martin Andelman, who talks about doing this on a consistent basis. And you might look up his website. He's kind of an interesting guy. If some of you have been in the business for a long time, you might remember the implodometer about banks that were going out of business back in the mid 2000s. And he was the brains behind that particular organization or whatever. But he's a really interesting character, and he talks about that this is almost a no-brainer if you can get the basics down pat. So I was just wondering if anybody else had that opportunity yet.
What was his last name?
Andelman, Andelman, Martin Andelman. And he does a podcast that's called Andelman Matters or something like that. And he's I find him a very fascinating character. And I don't know if he's still doing reverses or not, but he was Southern California guy, you know.
The ones that I've had weren't instead of bankruptcy, they were after bankruptcy. And the important document that I needed was the oh, there's a specific word for it. I'm going blank. It's like the final settlement, the final a decree.
Discharge.
Say it again.
The discharge decree.
Thank you. Discharge. I knew it started with a D. The discharge. So you have to have that. And then if they're on a payment plan, then that's satisfactory. It wasn't like either or. Though I do know there are loan officers who work with bankruptcy attorneys specifically for that. I just think the files are, you know, if I'm going to go after the hardest files, bankruptcy attorneys would probably be a good place to start. But can it be done? Totally. Just checking the guidelines too. It matters what type and it matters what the date of decree is. If you're doing it instead, I mean, you might save their credit, right? They're going to be locked out of credit for a certain amount of years after bankruptcy. But the other thing that's important too is they sign in the closing docs that they do not intend to file for bankruptcy. So at the time that they're signing for closing docs, that can't be like a strategic plan to do.
I had a quick question. First of all, Ernie, congrats on your retirement last Friday. That's huge. Thank you for your service. That's awesome. Ernie's also awesome. We connected on a couple files and he's just willing to help and dig in. So big shout out to the group. Shout out to Ernie as well. I did have a question. Have any of you had a purchase where you did the 10% overfunding, and how did you set that up in Quantum for the overfunding? I've like clicked all the buttons, dropped all the boxes, and I'm trying to figure out how to plug that in so I can run a scenario.
Who are you working with, Bryce, as far as what bank are you thinking and who's your AE?
It'll probably land at Longbridge for this one. They have, for those that are interested, Longbridge has a really, really, really solid purchase division.
That's what I
Really solid. So that's usually where I land for my purchases. And their AE is awesome. I'm a little independent. Just got this lead. They kind of gave me the green light yesterday, so it's still pretty fresh. So that'll be my next stop.
Who's your AE over there?
Robert Gonzalez.
Okay, I don't know him. But yeah, that would be my next stop, is to figure out, obviously they'll probably have better insight on how to do that.
Cool.
Yeah, I haven't done overfunded, especially in Quantum. But there are certain things that you can't get done as a loan officer. So for example, like I've had some jumbos where they didn't want to take all the cash. Now they have parameters now, but they didn't used to. And in order to show not taking all the cash available, the AE had to do it. So Ernie's dead on. AE is going to help you get in there. And if you figure out a way to do it in Quantum, please let us know.
Okay, awesome. Yeah, I'll do that for sure.
I couldn't find anything either.
I appreciate the effort.
No problem. No problem.
Also had a shout out for Ryan Hawk over at Reverse Focus. I had my consultation with him last week. He is a solid guy.
Yeah.
Looking to do some things there to kind of enhance what I'm already doing. So appreciate that introduction, Christina.
Yeah, so far they've been really good to work with for me. So I'm thinking about adding another city SEO, but we'll see how that prices out. I don't know if that's a one-time fee or if that's monthly that you have to pay for that. So we'll see.
So I was
Ernie,
thinking
how many?
how to differentiate ourselves. Can we get like a reverse mortgage hero designation for this group?
There you go. I have
What's
a
the name of that again? Reverse Focus, was it, Price? Sorry.
Yeah. So he was a guest speaker on. They've got a bunch of different options. They've got a website that can set up for you. They've got SEO, search engine optimization. and a CRM that they can set up for you. And they have different package deals. They're very transparent, and Ryan is just solid. I mean, he walked through things. They're very non-pushy. They really find out what you're looking to do with your business and see if it's a solution for you. So I was impressed. Really cool.
Awesome.
If you get on their site, you can just set up a consultation yourself. You don't have to call back and forth and see what works. He has like a Calendly thing where you just pick a time and bingo, you're on the Zoom with him. So
Thanks, Ernie. Cool. And congrats, Ernie, by the way. Well done.
thank you very much. Yeah, it's kind of weird being awake during the day. I've been sleeping 2 or 3 hours at a time for the last 3 years, so
Looks like you've been out. You got some color.
that's just my probably blood pressure.
Well,
Oh, it's something to note as well. We get, because of Christina in this group, we get 50% off the setup fees for reverse focus. So I cashed in on that baby. Yeah, it saved me like $150. So
Oh, wow.
that's
bravo.
way. And they don't pay that back retroactively, Ernie. I'm sorry.
That's all right. I got in a little early, so I got a pretty decent deal.
I had kind of a general question. I think we're all kind of asking this right now. What are your top 3 best ways to connect with clients that need a reverse mortgage? What are you guys doing? I seem to be doing it all, which is fine. It just seems to be a lot sometimes. Trying to maybe dial in what works best. And it's always evolving, but just wanted to kind of pitch that out to the group. What are you guys doing to connect a client? What's your best source? What could maybe we be doubling down on?
So far, my best source is financial planners, realtors too. The reason that I go after realtors is they're easy. If they have a lender, they probably don't have a reverse lender. So you can come in like, I don't want your forward business. Just want to teach you guys about reverse, and pick an office with a bunch of old realtors in it. That's either that or, people that have got family that's, usually it's like, hey, my aunt, my uncle, whatever. But the other thing that I started pushing with the realtors is, listen, if you're a commission-based, whatever professional, and you have your house paid down pretty well, we can set you up with a big line of credit so you're not wondering where the heck your next house payment's coming from. And, kind of go over the freedom of the line of credit with them, or they can, take as much as they need, and then, once they get a big commission, they can pay it back down and, keep cycling that way. So that's kind of realtor wise. And, I'm maybe looking at some other professions as far as that goes that can do that. Maybe I'll start pimping some of the mortgage officers too that that don't do this. But I think that's a pretty good hit if you can get it done. I'm going to add to your question a little bit, though. I asked it in a group yesterday. I'm not a big sales guy, so how are you guys asking for business as far as from your clientele? Do you straight out every time you talk to them, ask them if there's anybody you can help, or do you push that kind of thing? I don't want to come across as pushy, because basically I sell myself as educating people, and then, once I teach you about the mortgage, if you're interested, then call me back and we'll do your thing. But how do you guys do that?
Hey, Ernie, I don't have a lot of people of my past clients that are of age, but in my forward side, I'm incorporating the annual mortgage review or mortgage efficiency checkup. So I think that could be a good way for your past clients to drum up that conversation, and lead with we're going to check on your insurance and your taxes and see if there's any inefficiencies there. And then in the conversation, get into, you know, what their needs and goals and so forth are. And, you know, if there becomes a glaring need that way.
I like that.
I found it's helpful to offer value rather than, you know, call somebody with your hand out, because I think that's awkward for everybody.
Right.
One thing that I've done is I've reviewed my pipeline, and in a lot of counties in my area, we have what's called a circuit breaker that they can apply for, and it's a discount for their property taxes based on income and household size. So I'll usually educate them on what that is, and I can just download the PDF of the application for these programs, and then just let them know what it is. Whether they qualify or not, that's not, you know, something I decide. I mean, I can read the guidelines. They're all one page. It's easy. But just to let them know, I've actually, over the last 45 days, I've maybe started, you know, really reaching out. And I'd say 15 people didn't even know it existed, that they could not apply for a discount in their property taxes. So it's a way to be the hero and provide some value. And then, of course, I always ask, do you have any friends or, you know, anyone else that would benefit from this knowledge as well? Not, hey, who can I sell a loan to? It's, you know, who can I help with this as well and provide value?
Right.
And remember when you're
I have been successful really for years, going back to when I was doing forward mortgages, using Sensations. That's SENDSATIONS. And they have a bunch of postcard series that are aimed at mortgage and real estate people. And for instance, I don't think you can see this, but this is a picture of the front of the card of the little old lady bowling. And below that, it says, reverse mortgages are right up our alley. And then on the back, it had pictures of myself and my son who was working with me at the time. And that language is, reverse mortgages are right up my alley. Financing a home is a big decision for most seniors, especially if it's a reverse mortgage. With no monthly payments, the reverse may be a great option. That's why it's so important to have agents like Demas on your side. Call me, sparing you worry and striking up results right up my alley. That as a jumbo card, okay, with it mailed by the company off of your mailing list, is about 70 cents a piece with the postage. And I have clients that tell me that they save these on their refrigerator because each month it's a little bit different. This particular series, if you're going to look on Sensations, is the comedy series, and they have about 10 years of these postcards. You can pick the ones that are older people, and for instance, here's one that's this is a young boy on a horse or a cow going through his grandmother's living room, and it's the terms is need more room for your grandkids. So that's one way that I've kept connected with my what I call my over 62 clients. And it's a pushy. It's not pushy. It's funny. And so I would just encourage you to take a look at that as a possibility. Your database is where there's going to be a lot of money sitting there that you just need to figure out how to mine from that.
Yeah, I'm still pretty new, so my database isn't quite as big as some, but trying to figure out how to buy other people's databases that are vacating the space, maybe.
One thing that I've looked at, you can partner with a title company on this, is they can pull a report on properties in, say, a specific area that you know might be higher density, older folks, and they can pull properties that do not have a mortgage lien recorded on the property. So that might be a good opportunity to create an address list for that. I mean, they can pull the name of who owns the property as well to couple with that campaign. That campaign's really creative. I like that.
There's I don't remember the name of it. There's we actually have a title company, so that's been helpful. I just walk in and tell my daughter to run something. So but what I was worried about with some of these, I did some mailers and I didn't have a lot of luck with them, but it was probably the mailer that I created that was the problem. So, but it's something monkey where it kind of scrubs all your stuff for the do not call, do not disturb type of stuff. Does anybody know what that thing is called? I'm gonna have to research that. I'll get back with you on that if I figure it out. That's the last thing I need is getting.
Ernie, would that be MailChimp?
Yes, I knew it was something to do with a monkey.
Yeah, MailChimp. Yeah, yeah, yeah. Not monkeying around. I still do a snail mail quarterly. People have to take it out of their mailbox. They have to touch it. They can't just delete it on an email. And I've been doing that for years, probably 15, 20 years. I use a company called Stony Brook Publishing out of San Diego. And they do a specific reverse newsletter that you can do. I've just started reviewing it because I thought I'd have that as an adjunct. Maybe keep my quarterly one, and then on the off quarterlies, it's a smaller, pie of people that I have. But also, so I do that for my people over 62. Also, I'm starting to look at my over 55s for the reverse second through FAR, because people, they've got these great first mortgages. So I'm looking at that as well. It's a little tougher to get them in with but it's a 9.99% rate, which is pretty good for a HECM. Or second, I guess it's not a true HECM, obviously, but that's something that I'm going with. But there's a lot of good ideas here, so thank you, everyone. And it's stonybrookpublishing.com. And I had a rep forever. She just retired. her husband's law enforcement. They moved from California to Florida, so she's out of here.
Bryce, the other for forward and reverse, I'm having some pretty decent luck with CPAs if you can get in there, because especially the ones that do a lot of self-employed, we kind of help with what we're allowed to count as income and that sort of thing. Let them gauge how they're going to do their, instead of writing off 10 grand in meals that gets double charged to them, they, do some depreciation or depletion that can be added back in as income. So they, I've got a couple that just call me and say, talk to these people, see if they can buy a house, start structuring whether they're gonna, how much income they need and what they're gonna claim and that sort of thing. So it's, I'm not telling them what to do. It's just a matter of telling them how much money they need to make to buy the house that they're looking for. And that's kind of, I've been getting a little bit of business out of that as well.
Are you like just picking a CPA and calling them, or are these people that you already know? Or
Well, I started with my CPA, which is helpful.
yeah. Okay.
But yeah, if you just I would start with as many warm leads as you can get. It's one of the things that we do here, or my boss just did with financial planners, is he just put out a Facebook post, hey, who's your go-to financial planner, somebody that I can help advise clients with, bounce stuff back and forth to. So everybody puts their, tags their financial planner on there, and without even calling anybody, the first week he had 3 appointments that they called him to to set up appointments with. So I'm gonna do the same thing pretty soon and see where it goes from there. But they're the financial planners are gold if you can get them. They're especially if they're on board, they're handing you a client and telling them, usually, you're trying to explain the whole situation to a client, and on that side, it's like, hey, my financial planner told me to call you and get one of these. So then you can get on the phone with them and figure out what works best for their situation.
I've had two referrals, and then the financial planner advised them to get a reverse mortgage, but they won't tell me their financial planner's name. So I'm like, why? They don't want to share that information.
Well, did you approach them with usually we work together with your financial planner to see what would be the most beneficial reverse mortgage to you, or?
Yes, and the one lady, she just would not, and then the other lady didn't want to give me. She said that she even has a friend who could use a reverse mortgage, but she wouldn't even give me her name. I'm like, okay. She said, I'll give you your name. I'll give her your name, but I'm not going to give it to me. I don't know why.
For a small fee, I'll teach you how to do surveillance. You can just follow her until she goes.
Okay.
Then you'll know who it is.
I'll call you later, Ernie.
So when you're talking to people, what do you see as an argument or an incentive for doing the reverse earlier or later in age? Obviously earlier to avoid not being able to do it later, but you don't want to do it so early, right? That you max out your line, or, somewhere in between. But what do you, when you're talking to people, how do you sort of approach that topic?
So I can chime in here. Something that's really interesting is if you can get in with a financial planner and talk about the equity in your home being part of the financial plan. I talk about that with financial planners and nobody talks about it. They talk about how to create enough money to pay for their monthly expenses in retirement. So taxes, insurance, if they own their house free and clear, if they have a mortgage, they talk about how they're going to afford that. But nobody talks about the equity. They talk about leaving the equity to their heirs or what that's going to happen to it in the trust. So actually what I'll do is I'll run a simulation as part of the financial plan. So let's say as soon as they're eligible, I can even start from day one, 62 in my area. And we pull enough that we can actually make money doing the loan, because if we don't pull anything, you can't get it done. And then holding the money. So a lot of investors are going to be different. Most investors are going to be 12 months. If you pay over 50% back, you'll trigger an EPO. So you have to be kind of careful with that. But after the 12 months, so they hold the money, then they actually pay it back towards the home if they don't have another use for it, and open up a large line of credit. And then I'll run a simulator for them on that amortization schedule as to what that line of credit will do, and then add that to the financial plan. So I talk about empowering your current financial plan with the use of a reverse mortgage. So that's really powerful, but you just have to be careful with your investors. Some are like, 6 months. If you pay it back, from 50% to 99% in the first 6 months, we'll hit you with an EPO. But a lot of them are 12 months because, they can't have prepayment penalties on these things. So they'll typically won't hit you with an EPO. So, I've had one where they paid it down. They had money. So they just paid it down to $500 was the amount owed on the reverse mortgage. And it was on the 13th month. But then they just had this huge line of credit, and I ran this simulator for them. And by year 10, the money doubled. And nobody's talking about that. Nobody, no financial planners looking at that and putting that in the plan. And then, of course, I think it was last week we shared the form where flowing money from your retirement, when the market's going up, you pull from your investments that are doing well. And then when the market is coming down, you draw from the reverse mortgage. And then when the market comes up, you sell your investments, and then you repay the reverse mortgage. And if you do that, it'll actually, the longevity curve or the portfolio longevity of that retirement is amazing. So the earlier they can start and establish the line of credit, the sooner it will grow. And then I always talk about, who knows if this program will be available? Mortgages go through changes all the time. So this may not be available 5 years from now. Your income may change, you may not qualify, or the guidelines will change, and then you can't get this loan. So it's available now. Let's talk about this as a part of your financial plan, and then put it in place and make it work.
One of the
I
things,
guess I was always a little
Bryce, is
worried
that
because wasn't the part of the reasons why way back in the day that reverse mortgages were getting a bad rap was because financial planners were taking money out and purposely for the purpose of investing it, and it's getting risky. You know, I mean, that's kind of the something for the financial
that's never the
planners to have to
recommendation.
weigh out.
I don't recommend taking the equity and putting it in a risky investment. I talk about opening up.
Well,
Yeah. So typically it's, we're looking at a Roth IRA or a 401k, and they're selling those assets when they're up. We're not taking the proceeds from the reverse and investing those. I never recommend that. I mean, it's like, don't become
right.
Bank of Grandpa, blow your line of credit, because
Right.
you'll never get that back. I mean, and
Right.
so, yeah, so that's not part of the plan. I don't say take that and invest it. I say keep your investments and then fuel or enhance or empower your current plan with the reverse. Don't take the money and put it in an annuity. Don't do that. No. Don't buy a Ponzi scheme. Don't sign up for an MLM. Don't fund your grandkid that wants to start some crazy business. Yeah. No. Does that make sense?
Yeah, absolutely. Yeah, because I remember I thought that was one of the big things back in the day, that financial planners were the ones that were the least likely to trust recommending a reverse, because that's what they wanted to do, right?
Yeah, you don't want to be buying. I mean, a lot of people are, it's even in the paperwork. Are you planning to buy an annuity with this, and which one is it, and all that? What Bryce is mostly talking about is taking, in a down market, instead of somebody that's already retired taking, 10 grand a month out of their 401k that's tanking, you start getting into your basis, and they're never going to get back where they were. That's why you set the line of credit up, you take out of that, you stop taking out of your 401k or whatever your, account is, and let it settle and heal. And then when it does come back, that's when you can pay back into your line of credit, so that you're not, paying that kind of interest. And
one
you
of the
really
things,
look
one of
at,
the things that's important too at this point in time is the growth of that line of credit is dependent on the interest rate. So it's like you're rooting for higher interest rates. So instead of a 4% increase, it's 7 or 8 or 10 or whatever it might be, to the point where I've heard somebody say this, and I thought it was kind of dumb, but they went with a cap of 10 because they were rooting for the interest rate to be 13 or 14%, so that what they would be accessing in the quote wealth of their house was greater because of this factor. So it's a way to negate kind of the fact that the interest rate is higher, on it right now, that type thing. But another name that I think I might have mentioned before that I would recommend that talks to this line of credit in a really neat way is a guy named Don Graves, Graves, who's the American Council of Planning or whatever, something like that, and has written a couple books that are very, very good. One is for advisors, financial advisors, coaching them how to use the reverse to become more successful at it. And that might be a book that you might want to give to your financial planners or people you're trying to establish a relationship with.
good plan.
Yeah, I think Christine actually talks about this exact strategy, like having both available, using your 401k when that's, better, and use the mortgage when don't take from it when it's down. She talks about that in one of her courses. Good point.
Yeah, it's a huge strategy. I mean, I've talked about this like a million times, but when we ran, and it was on the financial planner's own software. So it was in their world where we ran a scenario where, okay, here's your financial plan. Here's your standard of living. You want $80,000 in distributions for that year. Right now, you haven't even talked about your equity. You want to live in your house. You don't want to sell it. So you can't get to it unless you incur a payment, which is going to make your financial plan worse. And they ran the numbers. And the reason the financial planner called me, he said, they don't have enough. They'll run out. They are not going to make it. They're, based on this life expectancy, I think he used 87 was the estimated life expectancy. They were going to run short. They weren't going to have enough money. So I said, okay, well, let's plug in. Let's not touch any distributions on their financial plan. Nothing. Leave it all in the market. Let's pull a reverse mortgage on their house. Let's get them a $200,000 line of credit and, a little bit of money for the first year and the first distribution. We're going to live off that and we didn't do any back and forth. I just ran a very simple scenario. Let's pull from the reverse for the first 4 years, not do anything with your investments. They went from running short to a surplus of over $175,000 in their other retirement assets.
And that was only 4 years?
Yes. Yeah. Well, because I mean, and there were some projections, right? And I am not part of that conversation. I'm not going to tell you what your 401k is going to do. I'm not going to tell you what your mutual fund's going to do because I'm not licensed for that. I can talk about the reverse. So the financial planner was like, oh, if we can leave these assets in and we can, do this and here's your blend or whatever they do. And because right now the market's depressed, right now the market's down from where it was, where it could be. Obviously, we don't have a crystal ball, and we're not in risky investments when you're in your retirement years. So nothing's going to do anything crazy. They're usually going to be pretty stable. But they had that exponential growth plus no distributions, so pure cash that they didn't have to come out of pocket with, plus the growth of the cash staying in their investments went from short to surplus of $174,000. Nice thing is, the heirs of the estate, they're going to get the extra, money in their 401k or whatever assets they've got, and they were also happy about that. So it's a huge conversation. Financial planners are awesome, and they are coming around. I've called some old financial planners, and they're like, "No way, get out of my office! Like, how dare you say the words reverse mortgage?" But they're coming around to it. Some are recommending it, and there's 2 people that these seniors believe: their doctor. Well, 3. Their doctor, their hairstylist, and their financial planner. And if they recommend it, you're in. I mean, like, it's almost a done deal if you get a financial planner on board.
I would throw in the bartender at the Elks.
Yes.
I have a financial planner waiting for me to be ready just to tell me, to give me deals. He's like a good friend of mine. He's like, when are you going to be ready? I'm like, all right, I'm almost there. I'm almost there.
Yeah, you got this group. You're ready. You're so ready.
I know.
You're ready.
I do feel pretty good. I'll tell you what, I've been watching Christina's webinars, and I'm on the 301 section, series right now. And they're incredible. Christina, thank you so much for doing those, because the 101 was just so rich. And I'm partway through the 301, so I'm getting there. And I am working on my first deal right now. It's for my in-laws, so it's easy. They're like perfect credit. Everything is simple and clean. So I thought, and they know they know they're my first. So, but I feel like I relayed the information to them extremely well, and they asked good questions. I knew the answers. And when I sent them to counseling, I asked them too. I said, so did you learn anything from counseling that you didn't learn from me? And she said, no, the only thing that they learned different or in addition was the fact that you could, how did she put it? You can pay money, you can shelter your money. So you have your reverse mortgage. You don't, and now you've got some extra cash laying around. Instead of sticking it in the bank, put it into the reverse. So it kind of shelters your money because the line of credit can't be kept. So now it makes that, it lets it makes the line of credit grow bigger, right? Because now you've put money into it. So it's kind of a way of sheltering the money. That was the only thing that she said she learned from the counseling that I didn't share with her. So I thought, well, that's a great tip. You know, so it can help instead of sticking it
Jackie,
in a, you know,
Jackie, Phil Walker.
that they don't want.
I'm sorry, but Jackie, Phil Walker, does webinars. I think he calls them "Waiting for the Rebound." And Phil was with Farce. He's someplace else now. Someone's going to know. Someone on here is going to know where he is. But he's still doing them. And they really do focus on the financial planner, on how to talk to a financial planner, and how a lot of what Bryce is talking about, you know, how to leverage. That's what his webinars are all about. And they're fantastic, actually. They really are good, and they give you a great background. So check him out.
You said his name was Phil Barr. I'm sorry, what was his name?
Phil Walker.
I think he's with HECM.
Walker.
Sorry, Bryce.
You're right, Bryce. HECM lending.
Yeah.
Right, he's at HECM. That's right.
Jackie, you can find him on LinkedIn, and he's got a bunch of stuff on there too.
Okay, cool.
That's an easy way to slide in there.
The one thing that I wish I had done, Jackie, this is a good tip for you, is I wish when I'd gotten started, so I did my first reverse mortgage in 2014. I wish I'd gotten more client feedback, either videos or reviews or something, because man, if I had that, I'm working on a website right now, and if I had videos of, hey, this is why we got a reverse mortgage, that carries so much weight and so much credibility. So if you have, you know, your in-laws, you know, if they're not, it's getting a reverse mortgage can be kind of sensitive, but if they're willing to just make a testimonial video that you can use, I mean, that just builds so much trust, and it really eases people's minds that other people are getting it, and these are the reasons why. I wish I had done that earlier in my career, is gotten more of that content to be able to share with people.
And you'd post that on your website?
Good tip.
That's what you would do?
Yeah. Yeah. So there's it's kind of a frequently asked questions section that I'm building out, but instead of using that section, I'm just creating testimonials. So that's it. And they're video testimonials. I've got one that I did recorded yesterday. It was a couple that did new construction. They purchased new construction with a reverse mortgage, and it has completely changed their life. I mean, they're so happy. And so just, you got them in front of a camera and just kind of talked about, even at the kitchen table, and just talk about what the reverse mortgage has done for them and why they made that decision and what their experience was like getting it.
Very cool. I have, I'm a little over analytical. I've actually got some people that are in their upper 50s, a couple of friends of mine that are technical analysts, and I'm working on them to do a all-in-one loan, so that and if you guys are familiar with that, the all-in-one loan to actually pay down their mortgage quicker, so that when they get about 5-10 years down from now, they'll be right in step to do the reverse. Because if they've got too high of a balance right now, obviously they're not going to be eligible anytime soon. So I've got a couple people that actually get it, and they're looking at the numbers right now. So it's a long game plan, but it's not for the faint of heart, but it's a strategy.
All right, you guys, this has been an awesome session. Thank you for everybody who shared, and absolutely go out there and close some loans. And Ernie, keep us posted. You're the most entertaining loan files I think we have, and good luck. If anybody's going to fight the good fight, I know you will.
Keep beating myself over the head with these things.
I think you're putting in the hard files now. You're going to get a whole slew of easy files all at once, and you're going to go, oh, this is great. Make up for it.
That would be lovely.
That's always been my experience. If I have to comp my commission to make zero on a file, then suddenly something big comes through the door later. So like you said, it takes the right kind of person to be in here, and you definitely are. I love hearing you guys chat about all this. So, all right, make it a great week, and we will see you next week. Thank you,
everybody.
Bye-bye.
Thank you, Christina.
Yeah, thank you.